This is Agriculture Today. Thanks for being along with us on this Friday. And now we're in touch with grain market economist Dan O'Brien of K State Research and Extension, his weekly stint on the grain trades. And Dan, we're running out of superlatives for these markets. We saw another surge on the futures yesterday, following basically a week of bullishness, uh, and corn seems to be leading the way.
Yes, I'd like to have a comment on something to not be fooled by in the markets, and that would be that the action in the upfront May contracts are coming into the final death throes of the delivery periods. So when you look at yesterday's closes on May corn, closed at the May contract 759 and a half, and the July at 718 and 718 and three quarters. So again, so July is still tremendous, 718 three quarters, but that top end price has a lot to do with positioning to deal with the delivery realities, and more so even with soybeans. The soybean May contract closed at 1605 and a half. July 1569, but the over 16 number had to do with, again, these jockeying for position, trying to avoid the worst possible outcome that people have between longs and shorts as they try to unwind, finish up the May contract. Now, one place where that's not showing up is in the hard red winter wheat contract. The May contract is 717 and three quarters up front, but then July hard red winter wheat, again, Kansas hard red winter wheat traded on CME, 726 and three quarters. So you got a little bit of carry in that market. So it's interesting that wheat isn't scrambling quite so much as corn. And also, by the way, you look at the supply demand balance sheet, we're not near as tight in terms of supplies for wheat as we are for corn, and rumored to be even tighter perhaps in the USDA numbers are even showing, and absolutely for soybeans projected to be just as tight as can be. So you've got that. Another thing that's happened, and particularly you see it in corn, is that in the last few days, I think the dry conditions, particularly in the northern states, and you can just put a bullseye on North Dakota, dipping down to South Dakota, over into eastern Montana, and dry conditions. A number of those states up in there coming out of that. You show the drought monitor map with, again, the dry conditions again in the Dakotas. But what's really forming, and I think it's as big a deal, if not bigger, is that the reformation of the dry conditions in the northern half of Iowa. And we've been struggling with that thing for, I think it's been 2 years now. And now if you watch that map, particularly the northwest corner, but really the northern half of the state, dry, classified as severe drought. So great planting weather, but raises cautions and concerns. Because of that, the back end months are moving higher. So December corn, yesterday's close 625 and a half. We were sitting at we were having forward contract prices, happy to see them at 550, 558, something like that, but a week or two ago. And now the forward contract prices across Kansas, based on the December contract, forward contract for new crop harvest, you've got, a Colby 621, Salina 606, 597, Topeka 655, about a buck higher in Garden City, Hutchinson 625, Columbus 6. So now we have been talking about the problems that have been brought about by this drought in major production areas in South America. Well, that's affecting the upfront contracts. But now our dry conditions in our country are affecting the perspective of the trade, and adding worry into an urgency into pricing of new crop contracts. And so on the one hand, I see what's happening in front contracts. Yeah, we're closing a contract out, tight situation. Yeah, understand completely. But the news to me is that the new crop contracts, particularly for corn, And I would say also for soybeans, November soybeans closed at 1409 yesterday, over 14. So when you have D's corn at 625 and November beans at 1409, you're starting to transfer concern over not just from South America, but into the United States for what we're going to end up with by the time we get out into the harvest of this year.
Now, the wheat market, Dan, is riding the coattails of corn to a certain extent. And you say that you can make the case for a post-harvest rally in the wheat trade.
This would probably be the one of the last stands of a K-State ag economist talking about grain. You make a statement like this.
But going out on that limb.
There you go. I'll go out on that limb. I think that that with the tightness we're seeing in existing current year market year supplies for feed grains, and spurred on by concerns about soybeans as well, that again, the first crop that will have that'll be a new source of supply coming into the United States will be the hard red winter wheat crop here in coming out of the central and southern plains, Kansas, Oklahoma, Texas. And there's, on the fringe, you've got eastern Colorado, you got New Mexico, places like that also coming in, parts of Nebraska. So that crop's coming in, and yet, so our decisions right now. So are we seeing what's happening in the corn market, and are we focused enough on that we're thinking, gosh, corn is so hot, maybe I'll tear up wheat acres and I'll put into corn, into wheat, and I don't know the lot of soybeans would go into that, because that's I think soybeans are grown typically to the east, a little different situation out here in these western plains. Anyway, the point is that so my thought is, I'd at least like to put it on the table, is that when that crop gets harvested, are we gonna put that in storage to export it somewhere, and we're okay export wise, but we're not doing great gangbusters, or will that crop be anxiously gobbled up by anybody that can get hold of a grain to keep feeding livestock, even to keep ethanol plants going, to you name it, not just here but abroad. I guess my hypothesis, we'll see if it turns out, is that I realize that we've got some unbelievably profitable numbers that can be projected for fall harvest, given the forward contract prices we've just been talking about. But I do think that it's worth considering what will happen when a hungry agricultural set of industries come in, and we actually have new crop on the table. And I just really wonder about a strong price rally going on in hard red winter wheat. And it won't be because if it'll happen, yeah, there'll be export pull, but it'll be because it's very likely to be because of domestic users just trying to gobble that thing up. So normally we harvest that grain, we take it to the elevator. In elevators in here in western Kansas. This year we're going to be taking it to feedlots, and we'll still be going to the elevators, no doubt, largely. But how long is it going to stay there? You just have an urgency, and I guess what you call a really very inelastic demand to get hold of a grain like that can accomplish a lot in livestock feeding and bioenergy industries. So I guess I'm just raising that thought up to help people to give thought to, do you take what's looking to be a strong wheat market with the moisture we have, et cetera, with the production you'll get, or do you tear that up and put a feed grain out into it and bear the weather risk out to the fall of having that thing? So it's a risk reward deal, and I just wouldn't give up the ship on wheat, because if the other shoe drops on this scenario that we're developing on such tight supplies, the market's going to have to come after wheat. That's my thought.
Dan, the USDA comes out with its latest World Agricultural Supply and Demand estimates this coming Tuesday. As you anticipate that, do you foresee anything there that would in any way cool these markets off?
Well, I do think that the pace of exports for U.S. wheat overall, and particularly hard red winter wheat, has been lagging the USDA's projections, and you can just see it in the weekly numbers. But so we just got done talking about these issues of domestic demand for wheat on the one hand, and also lagging exports for wheat on the other, particularly for hard red. And so the numbers that'll matter if what we've been talking about work out in play will be feed and residual and industrial usage of wheat if this comes about. So it does look like to me that the USDA, since they tend to not make feed use adjustments until they have hard numbers, or not to make major adjustments till they have hard numbers from quarterly stocks reports, and that's not going to come till the end of June, that the USDA probably in this coming report very likely will probably scale back the this current marketing year's export number, and that could show higher ending stocks for wheat. But the again, the other shoe to drop will be, we may not have evidence of that until we actually get out into you know, the end of June and have that next stock report. I would say that the prices for wheat are, well, prices for all these grains are just tremendous, and that's both cash price and forward contract price. We've been making an effort in our weekly reports to try to at least aggregate that in one spot where people can see them. And here we haven't mentioned soybean forward contract prices. I should mention that spot cash prices across, again, these major kind of regional markets that we've been watching. Spot cash 1560, low of 1539. Actually, in Garden City area, the highs in Colby 1560, Columbus 1570. Again, 1565, 1564, 69, all really tremendous soybean markets across the state. The new crop bids running at the low in Colby at $13.19, Garden City 1324, and then you start climbing up to Salina 1350, Topeka 1359, Hutchinson 1353. So tremendous. Wheat cash bids, every one of them starts with a 7. They basically range from 702 on the low side up to 732 on the high. So there's not a market that isn't affected either directly or indirectly by the weather concerns first from South America, and now I guess shaken confidence really in terms of what our summer prospects are in 2021 here in the U.S. And a lot of that coming from, yes, we're paying attention to the Dakotas. The one I'm watching is in Iowa, and that if that drought comes in, then you're talking number one corn producing state in the United States, and that'd be a big impact on the market.
Quick parting thought, you'll be a participant in a K-State webinar this coming week. Fill us in.
Yes, with all that's happening in the markets, so we thought it would be good to have a webinar coming through our www.agmanager.info website, or basically what we put out at K-State AgEcon. Myself, Guy Allen with IGP, and Mark Wood from the Kansas Farm Management Association are going to be talking about different things. We're going to speak about our intent plans. We're going to talk about corn, grain, sorghum, hard red winter wheat, and soybean market outlook and situation outlook. I'm going to focus on the domestic side for sure. Guy Allen, with his IGP background, brings a lot of strength in analysis to speak about international market trends, particularly China, South America, and everywhere else. And then we have Mark Wood coming in, our colleague from the Farm Management Association, to speak about cost of production and how cost of production may be affected by, again, fertilizer, other costs going up. But what we want to do, given all these forward pricing opportunities, is give some idea of where our base production costs are. And then let's say corn cost of production jump to $4.50. Well, normally it's $4 or something like that. $4.50. A 10% increase, a 10% rate of return over 450 is 495. A 20% is over 450 is, well, it's 540. And forward contract prices for corn now all start with a 6.
Mm.
So these are uh, these are amazing prices to look at. 35% rate of return over full economic costs, and just worth looking at. So I don't know that we can guess the high in the market very well, but man, right now we've got opportunities to tie in some very good rates of return.
Great information that'll be exchanged on that webinar. It's this Monday, and you can find out more at agmanager.info. The registration details right there at hand. Dan, always a pleasure. We'll talk again next week. Thank you.
Thanks, Eric. Take care.
On the grain markets, grain market economist Dan O'Brien, K-State Research and Extension. We'll be back shortly on Agriculture Today.